Hey folks, I want to talk about silver and gold in this video. I don't spend a ton of time talking about these two precious metals, but we've had some interesting things happen. Since November, gold has been up almost 22% until this week. And suddenly, out of nowhere, boom, it's down 7%. What's going on? Are we in the middle of another gold crash? Let's talk about it in this silver and gold precious metals update. Let's go. Hello everybody. It's Jeremy Whaley here from Trade Maestro. I hope you're doing fantastic today. And I want to talk about silver and gold in this video. Now, I don't really spend a lot of time doing analysis on these two metals, but we look at it every week in our profit picks class. I just don't do a lot of it on social media. But I want to share it with you because we've kind of had some interesting stories that are evolving over the last several weeks here. Since November, gold has been up. Here, I'll share it with you. Gold has been up about 22 to 23%. Right there, since November, since the bottom down here up to here. And then suddenly this past week, we're down like 7% in a week and a half. And you say, what in the world is going on? Are we in the middle of a gold crash? Is it a gold rush? What is it? Well, let me zoom in here a little bit for you and we'll talk about it. First thing is I want you to notice, you're going to see on my screen here, if you're not used to looking at my charts for gold and silver, you're going to see this green thing here. This is a combination module that we created in TradingView. It's based on the moving averages. And basically, when the price is above the averages, in this case, okay, I'll just put up here MA for moving averages, then the trade is green. And if the price is below it, and the averages have crossed down in that direction, the trade's going to be red. So that's what we're looking at here. So the trend has been bullish. The trend has been very, very good since about the first part of November down here. And like I say, at this time, the gold ETF, this is ticker symbol GLD, was trading down here around 150, 151. And just at the beginning of February, we're all the way up here at 182 with some substantial upside targets on this. And then boom, here we go. So, you know, a lot of people are looking at this, and I'm starting to hear people say that gold's crashing. I'm hearing all sorts of stories about manipulation, which we've been hearing for years. Look, I can't prove it. I can't prove it one way or the other. I think that probably the truth is somewhere in the middle. Somewhere between, there's some manipulation going on, but it's probably not a lot of what you hear on the YouTube channels and stuff. So the reality is price has been going down. So it doesn't matter if it's manipulated or not. Price has been going down. What do we do about it? Well, I want to zoom in here and show you a couple things that are kind of interesting and a couple of reasons that I think this is not the end of the road. I don't think this bullish trend is actually done for this time being. Okay. And first thing I want to do, I want to really zoom in here on these candlesticks if you can see them. And what you're going to notice is you see this series of larger candles totally engulfing the previous day's candle. That's a candlestick formation that we call a bullish engulfing. And that's actually a bullish signal. That suggests a swing to be coming in the near term. Now I'm going to open up my my lines here so you can see what we've got. And you can see that there's a yellow line in here. That is a known support line. We've seen buying happening at this price point right around 170. So we've seen that. There's a long history of that. So that is actually really good for the future of gold. In fact, you can see that we got some trades that are set up here to go into the trade, maybe around 173 with a target up there about 186. And that's kind of, you know, spoiling it here for you, but that's our target on this, on the ETF, is to get up to 186, okay? Now, if you go straight down, you're going to see my stochastics, and you're going to notice how oversold we are on this indicator. And look, that in and of itself is not a reason to buy gold. I want to be really, really clear on this. A lot of people do not, most people do not know how to interpret the stochastics oscillator. Just because you're oversold doesn't mean that it's time to buy. What it tells you is it tells you the momentum's oversold. And so something needs to ease up in that selling pressure. Now, in this context, because we're in the middle of a trend, that's what I want to show you here. Because we're in the middle of a trend, usually when you get to a peak and you pull back, you will see your stochastics ease up a little bit. Okay, that doesn't mean it's bearish. It just means it's easing up a little bit. Then we continue this trend. We got really overbought, and now we have eased up a good bit. You see that? So it makes sense I'm not saying it's time to buy. I'm saying it makes sense. If the trade starts to move to the upside, you will see your stochastic start to move to the upside, and there's plenty of room for this momentum to get going here. So it's not a buy signal. What you're seeing on the stochastics is not a buy signal. What you're seeing is that there's plenty of room for the momentum to ebb and flow to the upside. That's what you're seeing. So just make sure you're interpreting that data right. I am bullish on gold for the relatively near term, assuming that this support right around 170 holds as support and we do not have a collapse from here. Now, that is a big assumption because from a probability standpoint, there's no reason to say that we are not equally probable to have a bounce and continue to higher highs as we have the probability of dropping through support. And if we drop through support, 158 is the next target, followed by 152. Yes, that whole move could be in jeopardy of getting flushed away there. So that is my my outlook on gold. Now, I want to address this really fast. I hear people saying all the time, especially on YouTube. I don't know why YouTube, but specifically on YouTube. I get people telling me that I shouldn't be looking at GLD and SLV because it's paper gold and it's not the real gold. Look, the chart is essentially the same. And since I spend 99% of my time trading options, and the people that I work with, that I'm teaching, they're mostly trading stocks or options. These are the tickers they're trading. So that's why I look at them. Doesn't matter if you like them or not. You can use this analysis for spot, gold, and silver. That's fine. I'm just explaining to you why I'm looking at these tickers, okay? So the second one we want to look at here is on silver, and this is ticker symbol SLV as far as the ETF is concerned. And again, kind of a similar pattern that you see. I'll get rid of all these lines so you can kind of see this whole movement that you have here. Starting mid-October, the bullish move really kicked into gear, and we rallied from about $16, $17 on the ETF up to $22.50. That is a sizable rally. I haven't done the numbers on it, but I will do it right now for all of us since I'm recording a video. That's the perfect time to do numbers. So 22, round numbers here, 2250 minus 1760. We'll call it 1650 because it was below 1650 back here. So essentially, we've got $6. We're going to divide that by 1650 to get our percentage. And that's a 36%. Woohoo! 36% gain from the bottom here in September, which is essentially about where you were in October as well. And so that's a 36% gain until, oh, that was a horrible 6. Sorry, folks. Until this past week, and we sold off from $22.50 down to $19.50, so $3. Ouch! Zinger. Now, what I'm seeing on silver that's a little bit more concerning is you'll notice we are actually below the moving averages. Uh-oh, that's not good. These moving averages have crossed to the downside. That's not good. That is actually a bear signal right there. Okay, now listen, I'm bullish on silver, sort of. Okay, I should quantify that. I'm not bullish on silver. I like silver. I buy silver, but I'm not bullish on silver right now. Look, that's not for me. That's not me saying that silver's bad. That's not how I feel. In fact, if it comes back down to $16, I'll think it's great because we can buy more at $16. It'd be great. But the issue that I just want you to, long term, I really like silver. I love silver. In fact, I'm involved in a silver company. So that's my outlook, big picture. Short term, not as optimistic for, we'll call it for spot silver. So like if you're thinking about buying some silver bullion, or you're looking at investing in futures, or you're looking at doing ETFs like this, maybe wait for it to fall down a little bit or take the short side. More longer term, then yeah, upside's great. All right, sorry, got off on a tangent there. Okay, as I was looking at here, my target on this is $17. Okay, it's my main target for the downside, but I've got some other structure in here. Let me go ahead and put my lines back in. And what you're going to notice is before we can get down to $17, we've got a major pivot right here at about 1914, 1915. And that's really where my eyes are looking right now. See if I can get me some glasses. That's where my eyes are looking because, in fact, you can even see my bullish trade setup here. As long as that support holds, then this whole bearish possibility is off the table. So you don't have to worry about it, okay? But if that support does not hold as support right there, then be prepared for silver to potentially come all the way back down here to $16.50, $17, somewhere in that range. Let's come back to the good side. Let's say you're really optimistic on silver and gold, or silver in this case. Once again, just like we saw in gold, we were very oversold on this, and we're oversold in a good location. This candlestick formation is a really good formation in a good location. If that was at the top of a trend, it wouldn't be so great. But down here at the bottom of the swing, right near a support level, that's a perfect combo for a potentially bullish move. So that's why you see this bullish trade setup here. We're not going to take a bullish trade unless it moves above about $20.57. And then our target on that's going to be about $24. That's on the ETF. Spot is just a little bit more than that, but that's on the ETF right there. Your stochastics is an alignment for that swing right there. Your support structure is pretty much in alignment for that bullish swing that I just described to you there. Probability-wise, you're probably in the 50-50 range. It's kind of like what we saw on the Dow in my market update. We're just very much kind of in coin toss territory. Could really go either way here. So we're just going to have to wait and see where it goes from here. But anyway, there's just kind of an update for you. I could just keep going and going and going. I just talk forever on these things. But hopefully that gives you an idea. Then as I zoom out just a little bit here, since we haven't done a silver update in forever, literally, the possibilities to get back to 2021 highs, pretty decent. I mean, it's $26 though. That was the high that we're looking to get back to. I thought we were on our way last spring here when we had this big bullish run. You can see we kind of have a bearish trend here. So at some point that's going to break. I would love for this swing to break that and for us to head up to some of these higher highs. That would be fantastic. But you know what? It all happens when it happens. So until it happens, don't be surprised you're getting downward pressure. By the way, that actually brings up a good point. I probably should have led with this. If I were to draw this trend line through here, as I just did, that justifies a lot of why we're seeing selling pressure right there. And I don't know why I didn't have that on the chart already. I just failed to put it on there. I mean, we had some horizontal reasons to find resistance there, but that diagonal resistance is really quite compelling and explains a lot of why we're seeing selling pressure right there. So again, kind of your place to get eyes on. Will we build support here? And can we break out of that downtrend? And if we can, then I think the upside for silver could be quite good. I say quite good. On the ETF, 2410, and then 26 and change. 2620, 2612, somewhere in there. Spot would be just a little bit more than that. So is it time for like really, really big moves in silver? Probably not. I honestly don't know if that's ever going to happen. I think it's going to continue to probably, trend its way up. That's what I would expect to see. Obviously, I love silver, but we trade the chart. We trade the chart. We can't make the market do something the market's not doing. Doesn't matter what philosophically we agree with. Doesn't matter if philosophically I think silver should be $50,000 an ounce. I'm not saying I believe that. I'm just saying it doesn't matter what I think it should be worth. What matters is what it's actually trading for right now. And now you have the analysis. All right, if you like this stuff, you want some more of this, be sure to like and subscribe. Like and subscribe here on YouTube, Facebook, or if you're seeing this on Twitter or Telegram or somebody else, somewhere else. Somebody. Did I say somebody else? Somewhere else. Wherever you're watching this, like and subscribe so that you can see all of the updates that I send out. All right, hope you guys have gotten a lot out of it. And until next time, happy trading to all of you. We'll talk to you soon.